Hi, Warriors. The market's worried about a nuclear event in Ukraine. I think I talked about that for the last 3 weeks, really hitting the news now. So false flag or not, I don't know if the market could handle that. Maybe we'd rally. I don't know. Maybe the S&Ps would rally 200 handles on that plant being destroyed. What do you think, team?
It's one of those. We have to see what happens. Ukraine says that Russia's planning to blow it up.
Yeah.
Russia says it's in danger of being sabotaged by Ukraine. It's the usual games.
Yeah. So that's what I mean. I think both sides probably have reasons to play that card. I don't know which side it's going to be. But the reason Ukraine would do it, people are talking, is that would draw us in, because any fallout that, any air that floated into a NATO country commits us to it. And the Russians would do it out of desperation or just to escalate, to show that Putin is still in control.
I guess you've got to watch which way the wind's blowing before you decide who's going to push the button. If it's blowing Ukraine's way, then Russia can do it. If it's blowing Russia's way, Ukraine can do it.
I'll tell you what, the dollar's really, it's getting ready to do something, but it's sure taking a long time, So you have a vibe on cable, EG retraced quite a lot from this recent rally. Could it dig its heels in here, and then if the dollar sells off, the euro actually lead for a little while? I'll throw that out to you, Ryan.
Well, it's all your fault for taking a holiday in the middle of the week. That's why it's all gone dead.
Yeah, it was dead. Yeah, that's true. Dead before the holiday.
Yeah.
Dead yesterday, and not much today, except I don't know. S&P's down 23.
Yeah, it looks like a bit of dollar buying coming in as you guys hit the table. It's one of those funny times when you have a US holiday. The market doesn't know what to do over here, so it wants to see what you guys are going to do when you sit down, and then it usually follows on. So dollar yen looking a bit weak. Down towards the low end of 144s. It's just picked up a bit now. Dollar gaining a bit, a few pips here and there. But that euro sterling, I don't know. It might be heading back towards another attempt at 85, towards the lows in the 85s. We'll have to wait and see, but it doesn't look like it's doing an awful lot right now.
Okay, so Kman, you talked about the 10-year when it was breaking out that it could do a F.A.C.E.
Yeah.
Are we doing a F.A.C.E. or are we breaking out?
I'll let you know on Friday after the NFP. No,
I mean,
not really. I mean, as Ryan said, you guys are coming back from the 4th of July. Until now, the market has been doing a little bit of easily liquid but trading a little bit, barring yen and Swiss, perhaps the sluggish European data.
Yeah,
that is one thing. And then I think from tomorrow the dollar will take over, and then we'll see where we end up. There's really a lot of US data out tomorrow and on Friday, so I guess we'll see clearer come Friday afternoon. For the time being, the euro is really euro dollar is a magnet. 109 is really a magnet. There's more option expiries there today. It could be we really need to break out 106, 108.60 and
there's a picture. There's a formation. It's a triangle. So so we break out. If it's a wave 4 triangle, this is what I would prefer. Get the breakout, get the move to 110.5 and pull back, but eventually get to 112 and have this thing terminate. Huh?
If that's the way the US data will go, but I'm just having I'm really open-minded, and I'm just playing a few ranges. I actually play a few ranges, rather long dollars right now, and then for tomorrow I will probably I will probably be flat going into the data because then anything can happen.
We have the Loonie almost got to the breakdown. Be more bearish if it didn't get to it. I know that a few of my floor traders here at ForexAnalytix we're looking to short it up there. Anyone take a stab?
No, well, not personally. We haven't reached
Okay.
up there. We haven't reached.
So let me. Okay, that's a good question. All right. So what is your number? 33?
Well, I've got everything between 33.15 and 33.40.
Okay.
But then, yeah, again, we have the US data tomorrow. Imagine tomorrow and Friday. Imagine that they come out better than expected. Do we want to be short?
Yeah.
We can take like a small stab and then perhaps do a reverse if we fly through it.
Yeah.
And have a
So
small stab.
it really probably doesn't pay unless you just see like a 24-hour trade or into Friday morning before the number, because the number is a roulette bet.
Yeah, and
right?
Tomorrow we already have the ISM services, we have the yields, we have the challenges, we have the the ADP, we have the claims. I mean, there's already going a lot happening tomorrow, I reckon.
Gold's reversal is following through, guys, and it looks like if we could close over 1930, you could, kind of say shoulder, head. Really hasn't developed a shoulder, but if we close over 1930, I think you could see 1970 on gold, 1980.
Yeah, I think it was a pretty decent hold around sub 1900.
Yeah, this
a decent hold.
Yeah, and for the first time in a while, it's outperforming silver. But silver still doesn't look bad to me. I mean, maybe this time it's going to take gold to drag it up, but I don't know. I don't think I'd be short silver. I still own some from 40, so we'll see. B stops on the remainder and took some partials, but I think I'll stay long. The key is going to be this for the metals, if we're going to blow through 45. So really it's this for the whole market. It's yields and the yen for the whole market now, right? And they are kind of, finally yields caught up with the yen. Remember, I kept talking about the yen kept going up and yields were reacting heavy. And now they seem like they're more in sync with each other again. Yen caught up.
Yeah, and I'm a little reluctant on that gold yen relationship, to be honest. Gold rose $30, which is 1.5% from the bottom, but dollar yen is still hanging around or close to the top from the past month. So
okay, well, I think it's bearish gold when US dollar yen goes up.
Well,
and
bullish
when it goes down.
That's the correlation, but
well, that's because the dollar's rallying. I don't think it's necessarily yen against yen, but yeah.
I think so.
The dollar's rallying against the yen, but weaker. It's been weaker against cable, so yep. I think it's kind of yen specific. I don't know why. That's just what I see on the charts. So, Stel, who's going to win the battle of yields here?
Well, we talked about this on the flow show this morning. We are at 387 on the 10-year US, and we're at a big decision point. And we obviously have payrolls on Friday. Then we get CPI and the Fed, and there's an area which goes from basically here up until 4%, which is huge. So those previous highs at 4%-ish or something like that. So for me, for yields to break higher and break convincingly higher, we need to see inflation starting to pick up again.
Reemerge.
Yes, because for now, if I'm not mistaken, CPI, not core, the headline CPI year on year, we're expecting something like low 3s for the next print. So the direction is still the right direction. The pace is still pretty good. Yes, core CPI is sticky. it's a lot stickier. But then again, core CPI measures inflation minus food, energy, and something else. So basically, minus the stuff you need to live. It's you know, I know the Fed looks at core because it's less volatile, but you know, it excludes some pretty important parts of inflation. And
Well,
in any, yeah, go on.
Oh, no, go ahead, buddy. Finish
I was
up
just going to say also PPI year on year. We saw the Eurozone PPI this morning. Where was it again? Negative 1.5% year on year. Remember, this peaked at over 40%, 40. So we're going to see negative prints, and I think we're going to see the same in the US. So this negative year on year PPI will be a force on inflation, bringing it down. Now, I'm not saying that things are back to normal or anything close to that because prices are still high. But the thing is that the rate of change on a year-on-year basis of prices is going to drop. Will it go to target? I don't think so, but it's going to be close. And as soon as we see a 3 print, or you know, God forbid, a sub 3 print, the Fed's going to go, "Yep, we're done. You know, we're back to almost normal." That's it, because they know that they're strangling the economy with tight rates. They know they're doing that. So they want any excuse to say, "Job done. Let's now try and save the economy." So I think this CPI print is going to be absolutely massive. And if we do see something like 3.1, 3.2 year on year, I think the chances of the Fed pausing are going to go from, you know, 10 to 15%, whatever it is now, to 50-50. That's what I think is going to happen.
TLT after this sell-off here just rallied right back into the gap, which was at 104 area, rejected pretty good at 104. So you know, now challenging this. Even Jim pulled his buy orders. I mean, and he had them way down here. I'm talking about macro tides.
Yep.
And so he's just going to wait till they do something right, you know. So he has a fundamental view of slowing later in the year, but the technical action has had him pull his orders. So, you know, and he's been constructive for a while. So even the constructive guys are saying, you know what, the chart looks like dog duty. So that implies, you know, higher yields. And remember, we did this exercise, Stel, I don't know, about 2 months ago. We were talking about the 10-year, and I said, well, just cover up the title and tell me what you think this chart looks like. And you said bullish consolidation.
Yes, technically that's what it looks like. It hasn't broken yet. Now, the problem is that on the fundamentals, I think that there's a strong case to say that yields have peaked because of my view on inflation, etc. So until this is broken and broken properly, it's still a consolidation. Obviously, if you block the title, I would have said, yeah, this is bullish. But having the fundamentals on the, you know, in the background kind of pointing the other way, I'm not so sure. So obviously they can break to the upside. I mean, I'm not saying they can't, but I think I stand by what I said last week. I think yields have probably peaked here, unless inflation starts going higher. Of course, if that happens, then all bets are off.
Okay. I just want to show you guys a few techs that stop blowing off. There are some. So, you know, when you talk about semiconductors, it's not just NVIDIA, you know, there's AMD, you know, and, you know, Microsoft still looks like it'd be putting in. Here's NVIDIA. So could it rally one more time for a 3? Yeah, but I mean, it's starting to run, I think, on fumes. One thing to keep an eye on, if you faded me on Apple, you're doing pretty good. But keep an eye on this gap. This was, I don't know when they released their, this was earnings, this whole run, and this was their goggles. Okay, so we've had a lot of gaps in this. Here's a gap. This was the earnings gap. Had another gap, wasn't filled. And now in the what I think may be the tail end of the movie of this gap. So if it fills it, it's an exhaustion gap. And what does exhaustion mean? it needs a rest. So anyway, but you look at things like Microsoft as well. It's just some of the champions that have been, really outperforming everything. And Microsoft is one of them. And I'm just looking for it now. Well, here's Oracle. This was the leader. A lot of these stocks look like they've already broken, but I guess the key one that everyone will be watching is going to be this KRE, which is the regionals, and it had a pretty good day. I think that's Monday. So, I mean, if they could keep going, I think, the market could keep going. But if they end up failing, let's see, here's Intel, no trip to Hollywood, maybe puts in a failing rally. So just be careful with the tech, and I'll leave it with this when it comes to the market. So, people say, why did you buy VIX? And the number one reason is the formation I see. And I was going to be willing to buy more if it went to 12. It's a falling wedge. But the other reason is pretty simple. 13 VIX is price per perfection, and it's not perfect out there. That's my fundamental reason. So I don't think the market deserves this price for perfection complacency. That's really the fundamental bet behind the VIX. And it's compressed, and people have gotten rich selling volatility. Maybe they'll continue to be. But every once in a while, they have their day where when you're writing options, I've seen it before, it's like picking up Krugerrands off the ground. It's so easy. And then one day when the market turns and the steamroller comes running down the street, they give up all those, all those gains from just writing and being complacent that the lowies collect to having to cover those rights sharply higher. So just, I think over 16, we have something happening there. So Blake, I know you thought a lot about the charts on the 4th of July when you were
I did
having a
100%.
cold one.
That's all I did. I didn't
really?
even sit. Yeah, I just looked at charts all day.
Yeah, because it's pretty hot out there.
It is so hot. Hey, good morning, Dale. Good morning, team.
Hey,
how you guys doing?
Yeah. How are you, buddy?
Good. Just trying to get through this this frustrating period that I'm sure many of you are witnessing with Twitter. Twitter is
oh God.
It's it's a tool that I've used. I think I joined Twitter. I'll have to go back and look. I think I joined Twitter back in 2009. So 2009 when I first joined Twitter, and it's funny. I've met a lot of our team that works with us here at ForexAnalytix directly through Twitter. Some people on this team I've met only through Twitter, never in person. Hi, Ryan. Hi, Kman. Hi, Stelios. But it's such a frustrating thing. I'm just sitting there just trying to. I've been actually spending a lot of time over the last couple of days trying to get past all this, but and get through like some of this nightmare. But other than that, as far as the markets go, markets do seem kind of quiet. We are, starting to see a little bit of weakness in equities, and I was saying in the chat room there was a lot of people talking about the UPS being down quite substantially this morning pre-market, and usually that's the kind of headline that gets my attention, but it is union related, not so much. It's not related to the like slowdown in the economy, so people are selling UPS. So anyway, but you can see how the S&P, after hitting new highs, I believe that was on last week on Friday, if I'm not mistaken, that little spike high. We're starting to roll over a little bit, and we're in this ascending channel, something that we've talked about over the last couple of weeks. That's what I thought was going to originally reject us. I guess that was 2.5 weeks ago during the week ahead video when I drew this. Also, there's 161% extension, and that's kind of stalling us right now. But I don't want to get, overly excited that we're seeing some sort of reversal here. But as I think Kman said it a little bit earlier, there's a lot of data this week, especially tomorrow, that we're going to see that could really move the market. And then on top of that, obviously the jobs report on Friday, and we talked about the risks of a weak or a strong jobs report. If you guys were not here on Monday, we did talk about it and how I think it's pretty universal between the team. We're unsure between us, would strong data be weaker for stocks, or weak data be stronger for stocks? Because I think this might be an inflection point for jobs. We might see the payrolls number maybe come in below expectations, and if that's the case, would stocks respond positively because they'd feel that the Fed's finally getting what they want. The Fed doesn't have to raise rates anymore, or be aggressive from here. Maybe we are closer to that terminal rate. Or will stocks come under pressure because the data is actually weak, and maybe it's suggesting that we're gonna have a weaker economy. So I think all that's going to, those questions are obviously going to be answered by the end of the week, but I think the end of the week is going to be very important for us. And talking about tomorrow's data, as like I said, I think Kman, you mentioned it a little bit earlier. The ADP, I think we have initial jobless claims. We also have, what's the other jobs data that we have?
Jolts, Challenger.
Yeah, that's
ISM,
right.
Services.
Yep. And so, speaking of which, and I want to mention this really quick. We have the ISM services data coming out of the US. But if you guys didn't catch it last night, and I'm sure those of you that were on the Flow Show did, but a lot of the Eurozone services PMI data, actually, I believe across the board, came in weaker than expected. That's a little scary because we've seen manufacturing PMIs really miss, and that's been like the leading weak economic indicator, if you will, for the world, has been manufacturing PMIs. Services PMIs have held up almost globally a little bit better, and especially here in the US. So if we're starting to see some weakness in Europe, I'm wondering if it's going to bleed over into the US tomorrow, which that's why I think that the ISM data is going to be really important tomorrow for there. But I think we should revisit that conversation since a lot of people weren't with us on Monday. Let's go around the horn and let's start with Dale. We never start with Dale. Dale, what do you think? Do you think a weak jobs number, headline number, is going to have what type of effect do you think it's going to have on equities?
Well, actually, Blake, I think none of the numbers will matter if either the Ukrainians or the Russians, whoever accidentally on purpose blows that reactor in Ukraine.
So you think that the stock market is going to be more responsive to what's happening in Ukraine versus
if
what's
they blow
happening
that reactor? Yes, I think all markets, financial markets, will sell off dramatically if they do that. It makes me only want to be short risk. And I like to trade currencies, and I think the dollar is going to wash one more time. But this situation makes me not even want to have a position in currencies, because I think it's, that's pretty dollar positive, unfortunately. So I can't trust the technicals right now. So I'm pretty flat currencies. So,
all right. Okay.
Anyway, that's
all
what
right.
I think. I hope I'm wrong.
Yeah, let's hope you are wrong. Let's hope.
Okay.
It was like when I went out of town, I felt like I almost helped create a Russian coup, and I'm glad that it didn't happen.
Well, remember when COVID first started, Blake?
Yeah.
And we talked about it. It was still, China hadn't gotten to Europe yet. The market thought it was no big deal. In fact, you know what? You did. And I said it is going to be a big deal. And it turned out to be a big deal. We realized it, but not till it got to Italy. Okay. And we saw these people locked up in Italy. Then it started becoming real to the markets.
Actually, you know, I beg to differ. I was the first one. I actually told all the guys that I was trading with at Gelos. I told them all, "Hey, look, I'm going to Costco and I'm buying a big bag of rice," which I did.
So I have dementia. I have dementia. Anyway, anyway, do you know you have delayed fuses on things? So everyone's whistling past the graveyard with banking crises and wars in Europe, and the VIX is 13. Come on.
Yeah, the VIX is obviously unreasonably low. We got a lot of extremes with sentiment too. But well, Dale, thanks for your opinion there.
Just wanted to cheer the crew up.
Stelios, what do you think about jobs? You know, I think your response is probably going to be it's all about yields, but let's put it all together here. If we have strong or weak jobs, how's that going to affect the market, or how would that affect yields and then the market?
I think it's relatively straightforward, actually. Contrary to what you said before, I think, my opinion, obviously, if we have a weak number, risk rallies. That's what the market knows. That's what is known for ages. And yes, we will get to the point at some point where bad data are actually going to translate into, economic activity reduced, unemployment rising, etc. But as a knee-jerk reaction, I think bad data equals risk rally, and vice versa.
Okay, all right. Well, thank you for your opinion. You believe that the market would go higher on weak data. Ryan, what are your thoughts here?
It's split between what data it is. If you're talking jobs data, if jobs data is poor, I think stocks go down because it means less people working, but it has to be a real bad number and unemployment rate rising. That obviously then flags problems with spending. If it's wages that drops, or it's any inflation number that drops, that's good for stocks because it means the Fed won't have to go as high with rates and then potentially crunch the economy as hard in the months ahead. So that's the way I would trade it. Good on the ground data, retail sales, jobs, that sort of thing is going to be good for stocks. Good inflation data, i.e. low inflation, is also going to be good for stocks. High inflation is not.
Okay, so basically you want to see average hourly earnings drop. Headline number doesn't really matter. Stock should go higher in a situation like that.
Yeah.
So, yeah. Okay, that makes a ton of sense. How about you, Kman? Where do you fall in this debate?
I'm sorry, I can't talk now. I'm digging my nuclear shelter after hearing those talks.
I've got my tinfoil hat on, believe it or not. So
I'm literally crying. Oh my God!
Don't worry, man.
Yeah, I agree with.
There's something else after this. Don't worry.
It depends on which data. If the ISM and if the PMI start to go really materially lower, I think that's not good for risk. And then the jobs data, if it's really a bad number and unemployment starts to fly, then I think it's going to be bad as well for everything, yields plus equity markets. But if it's like a mildly negative number, then there's probably another leg into the equity markets to the top side.
All right. Okay. Well,
and if Dale is right, I think the dollar goes 20% higher.
Let's hope Dale is not right in this situation. Thanks, Kman. Steve, it looks like you're here. Steve, what are your thoughts going into all the data, and specifically the jobs data on Friday? How's that going to affect markets, do you think?
Hello, everybody.
Hello, Steve Areno.
Hi, Dr. Nick.
We had this conversation late last week, and nothing has really changed for me. What I said last week, and I've said in the past, is that jobs data usually is a lagging indicator. So I wouldn't be looking for jobs data to give us a forward direction. We know that we usually go into a recession with employment data being as good as possible. And when we come out of a recession, jobs data is the worst possible. So I do expect at some point the jobs data to roll over, of course, and we should, with the assistance of higher rates. I want to clarify though, right? Higher rates are not the problem that will cause the economy to go into a recession. Higher rates, because the current higher rates are just normal rates, is what's going to trigger the real underlying symptoms of a weak economy to go into a recession, right? Because we shouldn't have constant rates at 0%. So anyhow, back to the jobs data, I think that jobs data at some point will roll over, but I think that other indicators is what we should be looking for to give us an earlier warning about things going bad.
All right. Appreciate your opinion, Steve. Thanks for chiming in. Hey, look, we're going to have, we don't have any data being released here right now, which sometimes we do here on the F.A.C.E show. So I didn't try to cut anybody off as we are heading into that. We're going to have Tracy Schuchart is here with us, and with Dale. But before we bring her on, I want to mention, if you guys are not following us on the F.A.C.E show on Spotify, I'm going to put a link in our chat box. Actually, I bet Tracy's show will be on Spotify, later on today or tomorrow. I'm not sure when it'll get uploaded, but
Tomorrow.
Make sure you guys are jumping over there on Spotify to follow the F.A.C.E show. And what did you want to say something about that, Dale?
I haven't heard broadcasts on Spotify, but it's it's cool that it's getting some more reach.
Yeah, it's actually it's really great, and like I said, I enjoyed listening to him when listening to a couple of the interviews when I was
to make our guests happy too, because they get more visibility that way, and
100%
win-win.
Yeah, and especially all the macro podcasts and macro interviews that you do. It'll be great. Hey, one thing I want to mention, and I know we're bleeding and running out of time here for our analysis section of the interview. One of the things that I was setting up with the traders on Monday, I was just kind of getting my feet back in the water and just kind of looking at everything. I really like the dollar Canadian to the upside. On Monday, I wasn't surprised to see this reversal back up to 133. And I know you were talking about it a little bit earlier, Dale. The reason why I want to bring it up, because you were talking about it a little bit earlier. I'm looking at it as more of a false breakdown on a weekly and monthly basis. We broke below this 38% retracement. We broke through the support.
Got it was a big longs out.
Yeah, a lot of longs got shaken out the last couple of weeks, and during a potentially pretty slow period, and you see the dollar Canadian higher, even with crude oil, sitting at 70. It was at 70 on Monday, and we're at 71 today, and we're seeing the dollar Canadian much higher. So it's one of those that I think that if we see some, especially a U.S. jobs data that's, maybe it's kind of in line, but we see some weaker Canadian jobs data on Friday. This could be one we could see squeeze higher, really good, back up towards the 50 DMA, not the 50 DMA, the 50 DMA would be up here, but like the 200 DMA that would be over here, maybe sometime in the next week or two. So I'm keeping an eye on this one as a possible long. I know you were talking about shorting it up here at 133, but I'm really waiting on Friday and seeing what the data looks like. So anyway, with that being said, I want to thank everybody for being with us today, and it's nice to be back at it. Nice to be back from holidays. Dale, I'm going to pass it over to you.
Sorry, one last thing before we pass to Dale. Just a reminder, we had the flash sale for our 1-year plans.
Oh yes,
we had 10 to go at 40% discount, which is pretty much the steepest discount we ever give. What are you doing? And
I'm trying to go over here.
Pricing. Yeah, they're gone. But because of the US holiday, we thought that people might have not realized or missed it. So we have 3 more to go. So if you go,
so how do you take advantage of it? Because right here, I can't.
You go to buy annual at the bottom.
Oh, right here. Okay.
Yeah. You click on that big button. And
right here. Link in the chat.
Link in the chat. 3 more to go. Be quick.
Okay. All right. Thanks,
Over
everybody.
to you,
Make sure you
Dale.
take advantage of that. Thank you, Stelios, for reminding everybody. Because of the
This
holiday,
is a buy at the market.
There you go. You don't even have to try to put a bid in. You just take out the offers.
No,
You just
yeah,
take
no
out the
limit
offers.
offer.
Yeah, no, who cares? Just go in market order right there.
Just do it. What's a few pips? Anyway, thank you, team. It feels like Monday in a way.
It does.
But we're going to finish this week off with a lot of action. And what a great time to talk to Tracy. Tracy, welcome back.
Hey guys, good morning.
How are you? How do you like the weather in the summer in Florida?
Ooh, it's hot.
Yeah, it's rough, huh? Let me ask you this. Did you at least once think, God, I lived in Canada, I couldn't stand the winters, and now I found a beautiful place, and the summers are almost as tough as the winters were. Huh?
Thank goodness for air conditioning, right?
Yeah, I know. I'm in the same situation. So why don't we talk about what's happening, what's top of mind for you in this environment? The oil action's been kind of subdued.
Yeah. Kind of been range bound. We do have the OPEC oil seminar going on right now, which is not an OPEC meeting, but it is a seminar over the next couple of days. So one would expect, well, we're already seeing headlines out of there, but I would expect there to be a lot of headlines trying to push this market up, over the next couple of days.
Yeah, it looks like it's trying to build a case for maybe mid 80s. You think it's possible if we start getting through the 73 level?
I think definitely. And I think that, ultimately that's kind of where, OPEC wants it to be. Well, they want Brent, in that $80, $90 range. And so I think they're going to do whatever they can to get it up there. But, the market looks constructive, right now. As long as we kind of break above this little wedge here.
Yeah. Okay. So, are you more constructive natural gas than you are WTI?
God, no. That market is so ugly.
Still think it's ugly.
Yes. I mean, I generally look at it on the weekly. I mean, if you go back, really, we're trading in the same range we've been trading in since, the late 90s, the general range. I mean, nat gas
that's true.
To break out every once in a while, right? But, do you
think Europe will be as lucky with the weather as they were last winter?
Well, and that's another problem and something to be I would definitely be watching the winter. I don't think they're completely out of the crisis. And again, since they're, transition crazy, they've been really reluctant to sign any long-term contracts. So what will happen this winter is if we have an exceptionally cold winter and they do drain supplies quickly, they don't have a lot of long-term contracts set up. So it's going to be, a race on to try to buy as many cargoes on the spot market as possible.
Yeah. So, I mean, that's one of the reasons I think, it was really unusual the winter last year. So that's one reason has me bullish nat gas. Let me ask you, Tracy, do you think that it's a little bit too far out there, that I think that actually there's a high possibility of a nuclear accident or sabotage?
I was listening. I'm really hoping not. Really.
What's your gut tell you though?
So, I mean, I think both sides are saying something's going to happen.
Right.
So,
right. That's what I mean.
That's the frightening part about it. Again, I really hope not. I hope it's just talk, because I think that would just be a really dumb move for, whatever.
Well, can you imagine what a major breadbasket it is too, and you won't be able to farm that land for 100 years.
Exactly. And so, but let's hope nothing happens. But
yeah. What do you think would
certainly-
happen to the markets?
So, I think that we'd probably see the markets come down. You definitely would see the grain market spike. Right. So, I think global markets probably would get hit initially.
So
But
here's the wheat, which is, the majority of what they grow. And this was the first move out of the base. And then we had like floods in the Midwest last week. I saw cars in Chicago that were floating under bridges.
yeah, I've put a few tweets out there. It's the great crops are, it's hit or miss in the United States right now, but there is, it's bad when you have a drought and then you have flooding, right? Because the ground can't really absorb that. And so, I definitely think that, wheat's always been kind of a hard trade, but, I definitely don't think, especially over the longer term, that the downside is over, regardless, as far as grains are concerned.
Okay, I tend to disagree with you on beans. So I don't know if we're going to see new lows again, but it's funny difference between beans and corn.
No,
Too much rain didn't bother corn.
Yeah,
okay,
I know.
That puked, but too much rain seemed to affect the bean crop. So we'll see. It's the most constructive looking one while corn's making new lows.
Yeah, exactly.
Can you tell us what plug is and why you like it?
Plug? I don't like plug. What is plug?
Okay.
I know what plug is.
Okay, well, you wear them in the pool when here it is. I thought someone told me you liked it.
I don't even know what it is.
Okay, it's called Plug Power.
Okay.
So what are you doing? You still like the uranium markets here?
Yeah, I still like that over the long term. Again, it's a long-term trade. And as I've stressed a million times before, it's also a very difficult trade. So, it's not for the faint of heart if you're in for it for the long run, because, it's kind of an erratic market.
Okay. And what do you think of the recent action? What commodities are you most constructive on? And which are you more negative on?
Well, I look over the long term more.
Yeah, okay.
You know what I'm saying? So
That's
it's kind of hard to
fine.
say on a trading standpoint, but I'm pretty constructive on silver, just because of the industrial uses.
Okay.
And how much is used in renewables. There's a lot of silver.
Do you keep an eye on the stocks at Comex and how they're dwindling?
Yeah, absolutely. Absolutely.
Okay.
So, we're going to be in a deficit this year, and the deficit from between this year and next year is going to wipe out the last 11 years of a surplus. So, that's definitely a market I would keep my eye on, because, there's a lot of silver used in solar panels, hybrid vehicles, and electric vehicles.
Okay, so this whole move, we could just be correcting this whole move, and we'll get another run. You like silver more than gold?
So, yeah, over the long term, I like gold as well.
Okay.
But right now it's kind of back in that mush land, right? In that range.
Yeah.
It's kind of in the back in that, range. So I'd like to see it, either break down, break that 1900, or, make a solid move and stay there above 2000.
Okay. Your view on the dollar here, Trace?
Let's take a look at that chart really quick.
So to me, it kind of looks like it could have another leg down.
It could have another leg down, and I'm thinking with Yellen's visit to Beijing, she might let the dollar fall a bit.
Okay, because of the way the yuan's been depreciating.
Yeah,
look at
kind of getting some good graces there.
Yeah. Yeah.
And so,
Well,
I kind of watched that trip.
okay. Yeah. I wonder why she's really going there.
You know, I can't really be about trade. She's the Treasury Secretary. So I think it's about, I think the underlying
Digital
issue
currency?
is just currency. Hopefully not digital currency. No.
Well, how about their they've announced a new currency coming out at the end of August, brick currency backed by gold.
Yeah, we'll see if that catches on or if it actually comes to fruition. You got to have a lot of faith in the PBOC for that, and I'm not really sure that people do.
Only if they're forced to.
Well, yeah, I mean, if you're forced to, but,
like it's becoming here in America. So, and let me ask you this, really more important than any market question, Tracy. Do you miss TweetDeck?
Do I miss Tweet?
Do you miss the old TweetDeck? Come on, tell everyone here.
I really don't use Tweet. I haven't used TweetDeck in a while, so
I'm like withdrawing.
I know. I'm sorry.
Okay. All right. Anyway, I'm not the only one. Anyway.
No, and trust me, it's a big point of contention on the Twitter sphere. So.
Yeah, that and 600 tweets. We spent a lot of time on something that seems like it's seen its better days. So, all right. I think we've covered dollar. You have a view on rates?
On rates, not really. I mean, I think that,
because look at this 10-year yield, and you're a good technician. So you tell me, when you look at this chart, not this time frame, but weekly, and you just cover up what the title is. I did this test on Stelios. What would you say this chart, how does this chart look to you?
Well, that chart looks bullish.
See, that's the same reaction that, right.
Because you're starting to break up, you're starting to break over that that trend line. And so, I wouldn't be surprised if we saw a push up, a retest, and then a higher. I think that.
You mean all the way to 430?
Well, let's hope not. Well,
okay. Because if you're a technician and this is just
a move, yeah. But I mean, I think we're definitely going to have another rate increase in July, right, or this month. And I think the Fed's going to maintain their hawkish stance, even though we have seen inflation come down a bit. It's still, very sticky.
And bonds look lousy. They tried 104, rejected there, and look at the close Friday.
I know that was an ugly close.
Yeah, 104 rejection. They're going under par.
So yeah, I mean.
So we have higher rates to contend with, and can you say the name of the town that reactor's in? The city?
I can't pronounce
it. Try it. I embarrassed myself.
I can't. Let's just hope that, I would think that, if something did happen, let's hope not once again, might see it, you might see a move to the upside in bonds, right? Because people move to kind of safe and out of equities. So that's definitely something to keep an eye on.
Okay. So June really was a dominating month in risk. And here we are in July, and we'll see if we get some follow through. So here's your June in the S&P. All right, this is short term, but here's your monthly. See how important that 4,200 level was?
Yeah, it's huge.
But don't you think, again, that this could still be a failing rally?
It could be. I mean, it's 800 points.
It's hard to say anything rally. Bearish now,
but
isn't it?
But anything can happen, and we all know that. So
okay, all right. So you want to direct me to, is your new website up and y'all
Yes,
are going?
Hill Tower Resource Advisors is the new website.
I don't have it up here. I'd show it, and since
That's
I
all
don't
right.
have my tweet deck,
that's all. It's all right.
it would be easy to do with my tweet deck, and now I have to search for the column.
And then I'm holding spaces today for place your trades. That's on shipping. Wow. If anybody's interested, it's at 11 a.m. Eastern. We're going to be talking maritime shipping, what's going on with Russian seaborne exports. What's the container market telling us about global trade right now? Are we slowing down? And lots of other
many stowaways on these ships.
I don't know. I'll ask.
Tracy, you know what? We get good input from you, and you know, it's like having a cup of coffee with someone and laughing. I really enjoyed it. So, your highest conviction trade going forward? We just started summer.
Highest, so, I mean, conviction trade. I'd say we're running into. I like oil to the upside. Again, it's really struggling. So I'm going to really need to see it get over those 73s, get some follow through to really have any conviction. But we are, coming into the month that this is the month that the OPEC voluntary cuts come in. And so we'll start, in a couple of weeks, starting to really get that data in and see, how many of those exports, how much of that is affecting exports and, how much is really being taken off the market. So, maybe
a nice trading rally at 85, but do you see it like spiking again over 100?
Not at this juncture. No, not especially not with, not with the sentiment the way it is. And, what's really interesting is about positioning here is, there's just no interest in this market whatsoever. And so if we start to get a little bit of a rally, I can see people trying to jump in on that trade again. Yep.
Yeah, coattail the trade. All right. Well, I know a lot of people that follow you that coattail you, Tracy. So they do. Tracy likes this, Tracy likes that. So it's important what you say, because you have a lot of credibility, street cred out there. And appreciate you sharing your street cred here on F.A.C.E all these years.
Absolutely. Thank you.
Really, you're a friend of our community, and appreciate all the good work you do, Trace. Much success.
I think all you guys are fantastic.
Yeah, just keep rolling. And I'll get a hold of you on Twitter if I could figure out how to send a message to you later on today. Okay. Tracy Schuchard, everyone, at Shy Girl, and your website, and she's doing a Spaces today on Twitter. How do they find it if they want to hear more?
Just go to my profile page. It's pinned to my profile page.
Okay, cool. All right, Trace. Good hunting. Have a great summer. Rooting for you.
All right. Thanks. See you next time. Thank you. Have a great day, everybody.
That's Shy Girl. Thank you, everyone. See everyone tomorrow. I know it's not Turnaround Tuesday. See everyone tomorrow. Good hunting. You could join the team in 17 minutes, 18 minutes on the morning edge. Take your time getting into things and let the trades come to you. Adios.